The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Good afternoon, everyone. If you have any questions, it's 877-927-6648. We are finishing the last of that solar eclipse cycle that started on May the 20th. It finishes today with the lunar eclipse and the the full moon. And as Tom mentioned, the tides in Florida and I'm sure on the West Coast are very, very low, which they're supposed to be, during the full moon. So these are gravitational things, and that gives some indication of, how people react to fear and greed is our assumption. We don't know for sure, but that's what we assume. We have something very important coming up on Wednesday. It is a 16-day P-index date. That's a Pesavento index date that was coined by Frank Tauscher in his Futures Traders Almanac that he wrote for many, many years. Frank passed away about 8 or 10 years ago in Tulsa, Oklahoma, where he lives. He was probably one of the 3 or 4 best traders that I ever met in my life. He used to enter these contests where you would try to, outperform everybody else, and everybody was using funny money, and Frank always put his own money up. He always put $100,000 in, and he always made, every time, he made more than all of the other contestants combined, and every contest that he ever entered, he won. Anyway, he was the one that coined the P-index date. The index itself, it was derived by Dr. Ruth Miller, and what she did was she showed me that when there's only 3 aspects occurring in any one day, or 14 or more, that something usually happens very dramatically in the stock market. So it was very easy to test. We had all of the dates, and we had all of the data going back for many, many years, so we had well over 1,200 samples, and it really showed that these things do have a really strong cyclical affinity to the stock market. And so we have one of the big ones coming in on June 6th, which is Wednesday, and we have the full moon today, of course, and that'll have some effect, but the P-index date should be a much larger effect than the full moon cycle. Now, we're coming down. We haven't rallied very much. We've rallied a bit from the overnight low. But frankly, given all the bad news, I'm surprised the markets are not just, totally, melting down given all the news that's out there. If you look at the VIX index, the VIX index has had, if you look at the weekly, it's had 4 lower tops, and there's no fear at all in the market. I mean, there's no bullishness right now, but, there's no fear. And so this is something that, we need to keep in mind. Now, soon we are going to come into a positive time for the Bradley model. I'll post that into the Tiger TV so that you'll be able to take a look at that, and you'll see that sometime very soon, I believe it's right around the 20th of June, we're going to run into a period where we have a positive expectation in the market, and that means that the energy that's there should go between, I think it's around the middle of June to about the first week in August. So there's about a 6-week period there. But we still have a chance to, go down lower into the P-index date because it's a pretty big date, and it should have a lot more influence than what we're doing now. Just because the markets don't react to news and things like that, don't let that affect your thinking, because you have to react on what the charts are telling you, and that's the main thing to really keep a mind keep on what's going on. But the rest of the world, we were down really hard Sunday night, but everything came back a little bit, and some came back quite a bit. But there's no scaring out there. The VIX index is not telling you that there's anything happening. I really thought we would be crashing down into this June 4th to June 6th. We still might, but the odds of it are getting less and less. And so I would I wanted to be short going into the 4th of June on a high day, but unfortunately, it came in on a low day, and I would not keep this position, much, over. In fact, if it closes higher today, I would just scratch the trade and, wait and see what happens, because we're too close to this, and I was expecting a, big downdraft, which we did not get. Now, I want to get to the TBT here because we were stopped out of the TBT. I'm still very, very bearish the Treasury bonds, and I'm certainly would like to, keep an eye on, what they're going to do over the next 3 or 4 days. The Treasury bonds and Treasury notes had something, really important happen on Thursday and Friday, and that is there was a drop in open interest when the market started to go higher. It broke into new high ground in Treasury bonds in a big way. It did not in the Treasury notes. They had a lot of problems at the 1.45% interest on the 10-year notes, but the 30-year bonds got to 2.46%, and that was telling us that we all-time lows. Never have we been that low for a 30-year bond, and also at that time we had a drop of about 7 or 8% in open interest. Now, when open interest goes up, and prices go into new high ground, that's a very bullish sign. But when open interest goes down and prices go up, that's short covering. And so as soon as the last shorts cover, that's when, the market will probably drop. Now, what I'm attempting to do is I'm looking for a retracement in the Treasury bonds, to reshort, because I tried them, in the 140, 148, 20 area. I had a stop in. I got out of those, and I will look to go back in it again. Now, the other interesting one that happened on Friday was the gold market. And the gold market has hit the 618 retracement 6 times in the last several months. This is a really, really big thing, in my opinion, because it came off of the 618 retracement on Friday and rallied $80 an ounce. Now, I agree with Basil. You've got to give it a little bit of time here to, get it back and fill a little bit to see if it's really solid. But if gold is really good, it's only going to back off to about the 382 or 50% coming off this last $80 move. So the most you'd see, if it's really bullish, is about a $30 to $35 move to the downside in gold. If that happens, then, we've got a chance in gold to, to really have some movement to the upside. Whether it's related to all the baloney that's going on in the world or not, I'm not sure, but that's something that really needs to be, be watched for sure. Now, this is the anniversary of Tiananmen Square, and historically it's a big day for me because I was there in 2005 for the festivities. I was invited by one of the presidents of the university that I was speaking at. There were about 4 different places that the Mercantile had me speak at during the festivities there, and it was graduation week, and it was really a big thing. But on the 5th of June on 2005, it was a very sad day. That was the day that Ronald Reagan died, and the first thing that happened in Beijing on that was there is a place called Embassy Row, where all the major embassies of the world are in Beijing, and it's a beautiful place with beautiful trees, and all the flags are flying, and it's really a spectacular place. It's a terrific tourist place for people to go to take pictures. And when President Reagan died, every flag on Embassy Row was lowered to half-mast, with the exception of the flag of France. And Wen Jiabao happened to be a good friend of President Reagan. And what happened is that Wen Jiabao basically told all the employees for the embassy to please leave the premises immediately, and they turned off the lights, and they turned off electricity, the air conditioning, and they turned off all the services, water and everything, until that flag got to half-mast, which took about 2.5 hours. So that was a very big thing at that time in the Chinese news, but it was rather funny because I was there, when it was happening. The other thing what's interesting on Chinese TV, they have an English version there in the hotels. They usually have 2 channels like CNN and one other one that you'll be able to watch. But as soon as the word Tiananmen would be mentioned, the TV would go blank. You'd just see nothing but a test pattern. And it's not like that anymore. They do have a little bit more freedom of speech, but at that time, anytime the word Tiananmen was hit, the thing just basically shut down. So that's just a little trivia, but I thought it would be interesting because it is the anniversary of something that really tragic happened in the world back in 1989. So everybody say a few prayers. Also, send some white light out. I have a friend that's having major triple bypass surgery today, so send some white light out for him, and hopefully he gets gets better. We want to talk a little bit about the silver market here too, because I'll put some charts into the Tiger TV in just a moment, because I'm trying to rearrange them so that we'll be able to see them a little better when after the break comes up. I'll put 3 or 4 of them in, and I think that'll be interesting to look at. But primarily what we want to be watching now, if you're in the market, is that we have this June 6th date coming in. The ideal situation would be the market to come down hard into that June 6th time period, and then we would be able to expect to see a little bit rally, and then we will look at this particular spot that'll be coming in on the Bradley model. Now, the market is really very, very oversold, and given the fact that the news is incredibly bearish, it really doesn't look at that. The market does not look as bad as what the news is telling us. If you look at the small cap index, it's held up relatively well. If you look at the Dow Jones Utilities, and if you look at the Dow Jones Industrials, you'll see that all those are just holding up incredibly well, given to the fact that is, all this bearish news that we have about, the end of the world in Europe as it is. But, whether that's going to affect us or not is no one knows the answer to that. And everybody, is talking. There are targets on the euro, far, far lower than where we are right now. But, they have not been hit as of yet. Now, the dollar index, we talked about that last Thursday. The dollar index was making that very large AB equals CD pattern up at that 83.04 level, and so far it's held that. Now, if the dollar is really going to take off from here, all it's going to do is back off somewhere at around the 82 level. Maybe a little bit lower than that in 3 to 4 days, and then once it gets above the 83.60 again, that would say that ABCD pattern has failed, and then all bets are off, and it could go a lot higher. This would be equivalent to the euro breaking down below the 123 level again. So I know that the market's weakening. Now we're getting down to almost where we were Sunday night, which is ideal situation for making that low into the 6th. So we'll see if that's the case. Now the trade that I mentioned was in the newsletter, and that was to buy the SDS, the ultra weighted thing on Friday, because I thought it would be I had to write it a week in advance, and I thought it would be rallying from the May 20th solar eclipse into the June 20th lunar eclipse, but it didn't do that. So we got to take a break here and pay a few bills, and we'll come back. We're going to talk a little bit more about the TPT.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, it's 877-927-6648, and we want to talk a little bit about the TBT now. We did go below our stop point at $14.80 per share on Friday. Whether that's going to be the low tick or not, I don't know. But the important thing is that we've had a drop in open interest in notes and bonds as they went into new high ground. Now, we are in areas where no one alive for the last several hundred years has seen anything like this. In other words, we haven't been at zero interest rates basically in Germany except for World War I, and then it happened again during the Civil War here in the United States for just a short period of time. And so it's just is very rare. And, what happens after that, we really don't know. Now, there are things about, they talk about the QE3 movement and QE2 and all the other things, and I put a chart into Tiger TV today that shows that even with these trillions of dollars that the Fed has done, with these buying of Treasury bonds, the trend is still in the markets are still down. The QE3 only lasts for a short period. QE1, QE2 only lasted, for a short period of time. But they do affect the markets. Maybe that's the thing that will give the market a rally. I'm not speculating on that. I'm just watching the charts to see what happens. I'm as bearish as I ever have been in the bonds. In fact, it's the old adage, it's better to be out of a market wishing you were in than in a market wishing you were out. And that's the exact opposite of the way that I'm seeing things right now. So we'll watch in the future to get short these Treasury bonds, either by using the Treasury bonds themselves or with the TBT. The volatility that we had on Friday because of the report, was pretty dramatic. They moved 2.5 points, very, very quickly, and then gave a lot of that back already. So it's another indication that maybe there's a spot here where people are realizing that negative interest rates are not necessarily a good thing. I can imagine anybody in Germany that buys a 2-year note that pays them to hold the note, and the note is nothing more than a piece of paper, with a promise to pay. So it's beyond my imagination of why we do that. Now, the next chart that I put into the Tiger TV is what I think is a very important chart, and that's the gold chart that I mentioned earlier in the show, that we've hit that 61% retracement at 1522 in the gold. We've hit it 6 times over the past month, and now we finally had a really strong rally coming at a time when the rest of the markets were getting hit really badly. Gold, rose its head up and rallied $80 an ounce on Friday. It's given a small percentage of that back right now. But this is really, it's really interesting here, because if the gold starts to show an increase in open interest here, that means that new buyers, are coming into the market, and we'll have to watch that very, very closely. But the $80 rally, it means something because it's come off the 618 for the 6th time. But if we go below 1522 in the gold, believe me, it's not going to have any friends. It's going to break that massive support that's there, and that would really be negative. As we've been reporting here for the last, I think way back in January is when most of these commodities started to roll over, that it's been a real nasty move to the downside. And today is an important day, too, because crude oil has made the 786 retracement, coming off the bottom at $75 per barrel. We rallied all the way up to 111, and so the 786 coming back on that is at 82 and change, and we got to 81.56 last night. So this is an important spot, for crude oil. We go much below $80 an ounce in crude, and you'll be looking at $65 an ounce. And if you don't think it can go there, just go back and look in 2007 and 2008. Went from $143 a barrel to $33 a barrel. So just remember that these things can go back to where they were at one particular point in time. So we have not turned the corner yet in the crude oil. We have not turned the corner yet in the gold market, but we still have a spot to look at in the crude as where we are right now, and the gold has held up good. Now we do have a potential a problem in the silver market, and the reason for that is that silver is not rallying at all. It's it went up, and for the last 6 or 7 trading days, actually the last 2 weeks, as a matter of fact, it has not been able to get above the $29 per ounce level, and that's a negative sign when you consider that gold had this huge move, because silver is also a precious metal, and it should be moving a lot faster to the upside if it were actually the same thing. Now, we've got to take a little break here to pay some bills. The market continues to weaken here. We'll see. There should be some support here at 1265.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, it's 877-927-6648. And we are talking a little bit more about the stock market in general. And what I did is to post a VIX chart, a weekly VIX chart into Tiger TV, and it shows, the market making, lower highs. And considering the negative news that we've had over the last 6 or 7 weeks, you would think that the VIX would have really, accelerated and taken out some of those highs anyway, but it's been very, very orderly, and there's not much fear, coming into the market at all. And, we have, that doesn't mean it can't come soon, but right now, it is not showing it. The market is not showing any fear at all. If you take a chance, if you'll take a look at the Dow Jones Utilities, which is a smaller index, of course, but if you look at the Dow Jones Utilities, and I compared it with the New York Stock Exchange Index, you'll see that the New York Stock Exchange Index has basically been straight down, since May 1st. And yet the Dow Jones Utilities has gone nowhere. It hasn't even made a 38% retracement. Dow Jones Transportation is making the second part of an AB equals CD pattern today, but the utilities have held up really good. Now that could be a function of people searching for interest rate help because of the fact that these people that are retired that used to rely on 5 and 6% bonds are now looking at 2.5% bonds. And that affects them, so they go to the utility section to see if they can find, better rates. So that could be the reason. I'm just assuming that's the reason, because everything I look at is related to the technical part of what's coming to the coming to the market. I know the banks pay absolutely nothing now, and they're tightening up everything that they're lending on. So there's something out there. I don't know what it is. Now I mentioned something in the newsletter this week, and I've had some technical difficulties getting the newsletter out, so it will be a little bit late. But there's a phrase that people don't talk about very much, and that is it's a run on the bank. And we haven't had any bank runs here for many years. We had some in the 80s during the savings and loan, where people would line up, and of course the FDIC, made it well, and everything was okay. But back in the 30s, that was not the case. They didn't have an FDIC. When the banks closed, that was it. Now, my grandmother tells me the story about my great-grandfather. We lived in a little town in Indiana, and he had $1,000 in the bank. The banker was actually a friend of his from Italy, and he went to the banker's house to get his money, and he made him an offer he couldn't refuse to get the $1,000. My grandmother told me that the banker had a great deal of money in the house in boxes, and my great-grandfather persuaded him to get his $1,000. And with that $1,000, they started a small restaurant in our hometown there, and it was in the family for 74 years until it finally, was sold to somebody else. But these are just history things that mean a lot to me. Probably don't mean much to you, but at least I was hearing stories about it when I was a little guy. And you don't want to go through a banking crisis like that, because what happens is it becomes a domino effect. If that happens in Greece, what will happen is the next one will probably be either Portugal or France. Actually, not France, Portugal or Spain, and that's when the real difficulty happens. I recommend everybody go to Wikipedia or Google and search about bank runs, because you don't want to get involved with those. One of the reasons why I've always saved silver coins and gold coins is because of those times when if things ever come that way, you have something to fall back on. Arch Crawford, my good friend, he's the master of this. He has he has dried food and all the other stuff that goes along with that type of thing. But I keep a little bit just in case things like that would get really, really bad. You'll start to see it, I would believe, in Europe first, because it doesn't look like we have the banks have held up relatively well during this time of a bad publicity in the foreign markets, but the rest of them in the rest of the world actually don't look this good. The problems are really tough, because you have the news coming out of I got to get on my soapbox here for a minute, but you have news coming out about J.P. Morgan, how much money they lost with the whale in London. Well, you don't know how much they lost, and these derivative markets go to the area of $600 and $700 trillion. And so this amount of money that we're talking here, this is funny money. This is the weapons of mass destruction that Warren Buffett has talked about. So you don't know what will happen to these markets if in fact something like that does implode. So always have a little bit of silver, a little bit of actually the best thing to have is small denomination of silver coins, dimes, quarters, and halves that were minted before 1964, and that will get your family through. Have some water, and of course a little bit of dried food. I don't know if this is going to happen, but you got a family to take care of. Have a little bit there just to to make it make it safe for yourself, because we do live in interesting times. And that happens to be a Chinese curse, not a Chinese blessing by any stretch of the imagination. Someone asked me a question about the entering the Treasury bonds. What I'm watching now is I want to see how we get through the June 6th P-index date, and once we get through that, I'll have a pretty good idea. The next crisis that we have, we want to see if the bonds can go up into new high ground one more time. We have to keep watching the open interest. Those of you that have been, in the show here for TFNN, you remember, back in April of last year when the whole world was wanting to buy silver, and it got to almost $50 an ounce, and we were watching the open interest very closely day after day, and it gave us a tip-off 3 days in a row that this was not a time to be buying silver. It was a time to be liquidating, and that was one of the things that protected us, and that's what we'll have to watch this as it unfolds. And even though they were in new high ground, they did not act that bullish, and at least in my opinion. And you're talking about somebody who's already been stopped out, so you've got to be careful of what I have to say, because I'm wrong in this market right now, and we will be able to hopefully get on the right side of it. We've been saying the stock market's been going down for quite some time, and that's been okay. And we've been warning you about the the bearishness in the commodities, and especially the crude oil. And so we have to add all this together to see where we're going to be. But this is a key week because we have this date coming in. Either it's today or it's Wednesday, one of those two, and it will not be. It will not stretch out to Friday. In other words, if the date is Wednesday, it's either going to be Tuesday, Wednesday, or Thursday. It's not going to be Friday, and it's not going to be Monday. It's going to be Tuesday, Wednesday, or Thursday. So these are the times that's my opinion again. So remember, that's what we're looking at here. We're having a little bit of a relief rally in the bearishness in the grains because the weather became too bad, and that made it stuff that you would be able to have they've been going down for so much that it's actually they had to have some type of a rally just to take care of the oversold situation that we're looking at. Someone asked dropped a question to me, and that is about the P index dates. What are the percentage of that date as far as being a turning point? The probability of it being a turning point is better than 80%. In other words, 8 out of 10 of those will be actually very, very significant turning points in the market. And we have thousands of samples of those to prove that it does work into that, into that time frame. What you try to do is you match that to the, the pattern that you're looking at. The Pesavento index date, which we have June the 6th, is a combination of 16 different cycles that occur in the sky. These are all related to the astrological things that we look at. They're nothing more than these particular conjunctions and oppositions and squares. And then what we do is we look at these and we try to find the patterns of where we think we're going to be at that particular time. Now, I realize I'm going to get a lot of flack about talking about dried food and having some silver coins and stuff like that. But frankly, folks, it's better to be safe than sorry. That's all I can tell you about this. It's just one of those things that I've always believed in. There's a thing called Gresham's Law that I learned in graduate school that got me started into all this commodity business way back in the 60s, and that means that bad money drives out good. And that means that if you have a silver coin that is a good coin and you have a silver coin of the same denomination that's non-silver, in other words, a clad coin, the clad coins will stay in circulation, but the good coins will leave, and that's why you don't see silver coins in circulation anymore, is because they're worth 5 to 10 times. I think they're worth 10 times the value of what they were when they were minted. And so this is why you have to, protect yourself. Okay, we've got a caller from Greeley, Colorado. Are you there, Bob?
Yes, Larry. Good morning.
Good morning. What can I do for you?
It's just good to hear your voice, and I listen to you like church. But anyhow, EEM, crystal ball.
Okay.
The emerging markets.
Okay. Well, as you know, we've been very, very bearish those for a very long time. We're at a point now, Bob, where we should have some support because we're coming down to the 786 retracement. We're testing that at the
right
$35 dollar per share level. So we're very, very close to that. Now, I'm having a slight difficulty of upgrading the chart. So I'm just going to show it for what I have right now and where we're trading right now. but it is going down. No matter what happens in the future, as far as I can see, we should get a rally of maybe 10% in here, but I believe any of these should be sold. That's my opinion. Now, if you remember going way back many months ago, we started talking about the Chinese market, about how they were going to bail everybody out and they were going to have a soft landing. Do you remember that?
Right, I remember.
Well, those markets had been turning down long before we ever did. You know, the Hang Seng market, the Shanghai market, the Shenzhen market, all of those Asian markets had been turning down long before we did, saying how bearish it was. And now they're accelerating, and as you can see from that EEM chart, and that's telling you that there's not going to be a soft landing. In fact, there's going to be a really hard landing in China, but what the overall effects of it will be, I'm not sure, but it's just telling you that what they're expecting in China is not happening.
Right.
Does that make sense?
Well, I'm right now like 35 cents under, and I just want to stop on it. I got in it at 36.99.
Okay, that's not bad. See, you're very close to where I think we could be about. You might have bought it a little early, who knows?
Yeah.
But don't risk more than $1 in it. You know, $1's not going to change your style of living.
Yeah, I just put like I have 3 areas if I want to scale, but I don't like to scale down. That's against my rules.
Down. That's one of the things that I have.
I've gotten hurt that way.
Yeah, of all the rules that I have 10 rules, and the number 1 rule is never add to a losing position. And frankly, I don't think I've ever had a trade where I've added to a losing position and actually made money. I know people make careers of doing this, but it's that one time where they, keep adding, and it just the old saying is, it's a good buy at 26, it's a good buy at 22, it's a good buy at 30 or 20, it's a good buy at 18. Well, it's good buy house, good buy car, good buy wife, good buy boat. Pretty soon it's good buy everything. So
yeah.
You got to put a stop in somewhere.
That's where you go out and jump out your basement window.
I have never bought a 2-story house because of that reason.
A friend of mine says my dad used to call his big ranch house drinking man's house. He said you can't hurt yourself too much in it.
That's for sure.
All
well,
right.
Listen, thanks for calling in, Bob. I appreciate the call.
I love your show.
Well, thank you for the kind words.
All right, bye-bye.
You bet. Getting back to the overall markets, if you have a chance today, as a matter of fact, give me a second here as while we're talking. I will bring up the Nikkei, and which is the Japanese market, and you can see what they did to that last night, because they really hammered the Japanese market, and it bounced a little bit from where it was, but it's very, very close now to some really serious support at the 786 level. We're within just a heartbeat of this, so you have to be really aware that this market also is giving it a point where we might get a pretty good bounce. And the chart picture is very clear. It shows that we need to go about another 200 points down in the Japanese market, near the 8,000 level, and we will complete a very bullish Gartley that has taken actually 4 years to complete, on the long-term daily chart. I mean, it's just actually a really pretty picture if, in fact, it does hold this particular level. And anyway, we got to take a little break here, and then we'll finish up the show.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I think we have a caller from Palm Harbor. Jim, are you there?
I'm here. I don't know if you can hear me.
I can hear you perfectly. What can I help you with?
I was at the Neil Diamond concert last night, so I could not put on the trade that I wanted to go short, but I caught the bounce this morning, took 6 points. I reshorted at 1268 and just hanging and watching to see what's going to happen. I didn't know whether you were able to put the short on last night or not.
Well, we were watching it, of course, when it opened lower, and I have not touched anything. I'm waiting until Wednesday. That's what I'm really looking for. To see if this is the date, because it's a P-index date, and it's important, to keep a look at it. And the fact that, the world didn't come unglued overnight, but the market didn't rally. So that's telling me that, it still has a little bit more to go to the downside, and that's all I'm looking at, just waiting to see. But I don't trade the really smaller swings. I'm trying to trade the larger swings.
Okay, so you're going to wait to initiate a position that way.
Yes, what I'm doing now, Jim, I'm spending a lot of time focusing on the Treasury bonds, because I really still believe that's going to be the best thing to have for the next decade, as far as I can see. But I want to be able to get in that again and try to do that. I'm also have a little bit of gold, and I'm watching that for the first correction. I'd like to see a nice AB equals CD pattern in the gold, and that's pretty much what we're looking at.
Can you, if you have a chance, to pull up the NYA and just see where we're at in terms of a pattern right now?
Sure. I'll be happy to put it into Tiger TV,
okay.
And then what I'll do is I'll put that in there now, and then I'll take the next caller. How's that?
Good. And go take Sarah and see Neil Diamond in Phoenix in August. You'll really enjoy the show.
Yeah, I've seen him several times. I like his show very much. Okay, we got a call from Mark in Massachusetts. Are you there, Mark?
I am, Larry. Happy Wet Monday.
Well, as long as the Celtics win, it has to be a good day. What can I do for you, my friend?
True. That's true. I'm a little bit confused about Wednesday. I think you've answered it in the last caller, but I just want to clarify in my own thinking from my own trading. Do you think we'll go down into Wednesday and then rally from that point on a short-term basis?
Yes, I do. I do think that we're going to have a bounce coming in on Wednesday, and from that point, it might only last 3 to 5 days, but I don't think the really good bounce will happen until the middle of June when we have the Bradley, market come in and tell us a little bit. We're almost at the 61% retracement in the New York Stock Exchange Index. It's only about 50 points away, so just a little bit lower, and we're going to be looking at this level. We have a chance to make 1,200 in the S&P, S&P over the next 2 days. If it really gives up the ghost, it could certainly do that. It's at a real important point. It could stop right here today, or we go down into Wednesday. So this is a real critical level, and that's why I mentioned it, many times in the newsletter, and I've tried to do it on the show today.
So you think down into Wednesday, then rally, then down again, and then back up in later on in July, you said?
Yes, yeah. The real easy trade, if it follows like we want, will be the one on the 1st of August. That's the one. But, we got a lot to do between then and now, for sure.
And it's a lot of time. Who knows what will happen in the world?
That's for sure. Well, listen,
okay, Larry, thank you. You have a profitable day trading.
Well, every day above ground for me is a good day, my friend.
Okay, thank you. You take care, buddy. Bye-bye.
Okay, thank you. Okay, we're going to be winding up the show here. And the thing to watch now is we're coming down into some important support in the New York Stock Exchange Index. The market doesn't look nearly as bad as the rest of the world is telling it that it is. So we could get a pretty good snapback rally starting this week, and then we will have a better idea of what to do with it at that point. But at any time, the thing could literally give up the ghost. They might just take the euro out of Greece, whether that means anything or not. I'm not sure. But what we have to worry about is the domino effect. And just keep in mind, if you hear